But Rana Gupta joins in to talk about his take on the markets. Rana, hi, good morning. Just a little puzzled the way HDFC Bank, HDFC, Bajaj Finance, etc. are moving today. And just taking a cue really from HDFC Bank's commentary after their numbers, the fact that they've sounded off red flags. They've talked about their retail growth actually slowing down. They've cautioned against NBFCs, CVs. They've highlighted agri distress as well. Do you think the pain is far from over? Because it's now the big boys which are also sort of feeling the heat.
Yeah, good morning. I think this, after many quarters, we are seeing that retail-oriented banks are highlighting lower growth and then some asset quality issues in the areas that you mentioned. And these are all after effects of monetary policy that may have been too tight for too long. So that therefore now we have seen pain showing up. We do think that because the inflation is under control, fiscal deficit is under control, we do think in the upcoming policy meetings, RBI should be able to cut rates aggressively, and that should help to ease some of this pain. But to answer your question, I think this is just the beginning of the trend, and we do need to see aggressive interest rate cuts for this trend to moderate or reverse.
Okay. Rana, let's also get in a sense as to what the overall environment is when it comes to bond yields. Given the fact that we are seeing them now at those 2016 lows, do you believe that all of the macro cues in light of the way the bonds are shaping up is indicating that we are going to see now an interest rate cut by the Reserve Bank? It's only a question of what the quantum is going to be. And do you think that to a great extent this could be the next silver lining?
Definitely, I think the interest rate cuts are going to be the next silver lining. I won't be able to comment on the bond, the 10-year bond target yield, because that's not our specialty. But I think what we would want to highlight is that although the government bond yields have come off quite sharply, the bond yields they remain quite elevated. The corporate spreads have expanded. I think that needs to come down. That's number one. Number two is the credit transmission is to improve, and rate transmission is to improve, because although RBI has cut by 75 bips already, hardly any banks have cut their deposit and lending rates. Now, that is going to be very important. Going forward, I think two things we need to watch out for: how much RBI cuts and how much the liquidity improves. Therefore, how much the commercial banks are able to cut deposit and lending rate to transmit those through the economy. Because with only RBI cutting and not transmitting, not much would be achieved.
Okay, that's the take coming in on the overall interest rate outlook. Meantime, let's also understand what your view is on the NBFC crisis. While we are still seeing the ripple effects, there have been some steps taken by the government, the Reserve Bank, to assuage the concerns. What more, in your view, needs to be done, and how much more pain do you see for the sector playing out?
I think this is one thing which, in at least in our view, was a bit underappreciated. What the government and the RBI has done to the NBFC. I think we do think that through the budget that first 10% first loss default guarantee was a significant step. So that's number one. Also, as per our understanding, RBI could have powers to appoint or remove directors in NBFC. I think that is another positive thing. So in time, all this should restore some amount of credibility particularly for the troubled sector of NBFC. And what we do need to see is an orderly deleveraging for the NBFCs who are under pressure. The good thing is that the promoters are selling assets. So as we see, and if we see those asset sales happening in an orderly manner with acceptable haircuts, I think that would mark some sort of halt of this deteriorating trends for NBFCs.
Right. Rana, I wanted your view then on the overall market. I mean, we all know that at a time when global markets are holding out, India is not really performing all that well. The broader market recovery still is a far, distance away. Just last week, we've had a 5% fall for the small caps. Where is it that you find investment opportunities? And do you think it's going to be at best a very meager 10, 12 odd % kind of return that one should expect from here onwards for the remainder of the year when it comes to equities?
I think equities are all about growth, right? Currently, the growth has been moderating, and our view is that growth is moderating due to, as we discussed in the beginning, that monetary policy had remained tight, and although RBI started to cut, but that did not transmit through. So we have to, for growth to revive, we have to see that rates are transmitting through. So that is, I think, is very, very important. Once you see that growth transmitting through, and right now the liquidity situation has improved, we do believe the further subsequent rate cuts will transmit. So therefore, I think the opportunity question that you asked should be in the rate-sensitive sectors, and we would think some of the select financials, commercial real estate, utilities, they are typical rate-sensitives. And as if you follow the past patterns, then this rate transmission should revive the demand for sectors in autos and building materials, but that will happen only with a 2-3 quarter lag. So that is maybe a end 2019 or beginning 2020 story. So I think it all depends on how deep and how fast rate cuts we get from RBI, how much the liquidity situation improves, and how much the banks are able to transmit the deposit and lending rate cuts.
Okay, fair enough. Let's also talk about the earnings. It's not been the greatest set of quarterly numbers that we've seen trickle in so far. Do you think that there is a fear that the earnings could continue to remain weak for a few more quarters before finally stabilizing?
Oh, absolutely. Yeah, I think that one can say that, and earnings are backward looking. So it will tell you what has happened in last 3 months, and obviously earnings can be worse than expectation, as we have found out the case so far. But I think earnings would remain weak for at least 1 to 2 more quarters, because but the underlying economy is still struggling under higher real rates, right? So I think that is yet to change. Once that happens, I think then you will see maybe in the last quarter of this year or beginning quarter of the next year, earnings kind of turning around. And also, I think Q4 of the calendar year 19 or Q1 of CY20 will have a benign base. So I think that is somewhere where you could see some signs of pickup, but I think earnings could remain weak for next 1 to 2 more quarters.
Okay, there is, the expectation that in order for the overall consumption slowdown to abate or, marginally, we would have to see a pickup in rural. How have you seen, the kind of steps that have been taken by the government in order to improve the prospects for the rural economy? And do you think that that too is still some time away? What's your view on consumption?
I think on the consumption side, rural India has not been doing well due to various reasons. And if you look at the fiscal arithmetic carefully, in the rural and the social spending actually got quite a bit of boost. The spending is actually higher quite sharply there. The point is that they are still weak because those kind of subsidies or different programs are in various stages of implementation. As they're going to get implemented, we do expect some revival to happen in rural India. And that can happen, as and when the program can lays out. So our guess will be sometime around, in last quarter of this year, you could see some improvements in the rural India demand scenario.
So given your market view, Rana, I mean, what is the best case scenario? Do you buy the dips currently some of the meaty large caps are seeing, or do you go with the broader end of the market because that's where you're likely to see a higher beta play out whenever the recovery happens?
So, we kind of think of more opportunity on a bottom-up basis. So we are rather focused on the areas where the opportunities could come in this decline. So one area of opportunity would be the rural India, as we discussed, because we do expect government spending to materialize and demand to pick up towards the end of this year. Then I think there are opportunities in the lower risk beneficiaries, like we discussed, like select financials, commercial real estate, and utilities. And I think the ultimate rate cut will lead to demand revival, but that is some time away. And that will be auto and building materials. So we'll be more focusing on those spaces rather than thinking about the large or mid-cap stocks.
Okay, and that's the take coming in as to where you can look for opportunity in the markets at a time like this. How worried are you about the liquidity situation, Rana? Because in the last month, we saw a massive sell-off from the FIIs, close to 5,000 crores. Do you believe that with hopes of the interest rate environment improving, that we could see the liquidity situation pick up? Or do you think that at a time like this, it is going to continue to remain a concern?
See, liquidity situations overall is benign. I mean, whether you look at globally or locally, it is benign. I think one of the reasons why you have seen, and this is one of the reasons why you have seen FI negative numbers for last few days or weeks, there were some mismatch of expectations within the budget, because we do think that the current proposals of taxes and all that would weigh down on near-term sentiments, and that's what you have seen. But ultimately, flows are a function of growth. If the growth comes back, given the global backdrop, given the local backdrop, we do think flows will come back. And again, for growth to come back, it's very important for rate cuts to transmit through. So if that were to happen, that with the roadmap that we discussed, we are quite confident in that case, liquidity situation, given the global backdrop, will not be a big issue.
Rana, great to have you on the show and glad that you could take time out and speak with us today.